going on, traders? What is going on? Let me just sort this out a second. That's that and that's that. Yes, perfect. So just let me know if you can hear me clearly, please. Let me know if you can hear me in the chats. Thank you, thank you. I have a big question for you guys. Why is all the cryptos coming down? I was looking at Dodge, Bitcoin, XRP. What is going on? And is it going to recover? That's what I want to know. Uganda sounds perfect. Okay. Okay, I think we was having some microphones problems there, but I think we're good to go now. Screen zoom in. Okay, fine. So microphones all good. I got to show up. I will show up every day. Moving forward, it's going to be Monday to Friday. But yesterday I had some things to deal with, and I had a live trading session with my community, so it was a bit too much for me to come on the live yesterday and then do that. Sound is back on, but it's very low. Are you sure? Yes, it is low. It's not picking up well. Okay, hold on a second. The microphone audio is too low. All right. Okay, I've turned it up. How is that now? How is that now? Oh, gosh. Da, 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 da. Okay, listen, let me try again. Let me try again. Okay, I'm trying again. I've turned up here. For some reason, OBS has restricted my my sound. Much better. Okay, fine. On your side, how is the sound? All right, no worries. Let's get this party started. Let me figure out something here. All right, cool. So, welcome to the session, everybody. Haven't really looked at the markets this morning. I did have a question for you all about the cryptos and that, but nobody answered me. So never mind. Sound is okay. Fine. All right, let's just get on with it. So it's been a really, really good start to the month for me personally. In terms of my trading, I've done pretty well. I'm trading around 60% win ratio, which is pretty good, and a profit factor of around 2.07. So that's not bad at all. And up until now, I've managed to, just for this month, make 27%. So risking not 1%, guys. I'm risking a little bit more than 1% on my trades, around 1.5 to 2% per trade. So if you put it to 1% risk, then it won't be so inflated. You'd look at around, I'd say, what, 14%, which is not too bad. Now, in terms of what happened yesterday with my trading, so yesterday I took a sell on gold. at these structural highs, and I managed to bank around 7%. Managed to bank around 7% off of this sell yesterday, which was pretty decent. And the rule of thumb really is for me to just take one trade and get out. So I took the sells yesterday from around these areas here, scaling down to the 1 minute time frame, and I was in a trade for a little while, but as I said, I managed to bank 7%. Then what happened, okay, listen, just give me a second. Hello, hello, hello. Hello, hello, hello. The restrictions come off now. Let me see. Guys, sorry, man. I am here. Oh, yeah, perfect. It's going to work now. Okay. Thank you. Thank you. Thank you. Thank you. All good. Thank you, sir. Okay, everybody, tell me the good news. This should be absolutely perfect now. The volume should be perfect. Everything should be perfect. My face cam is off. My face cam is slightly off, yes. Oh, that'll do. Okay, there is sound now. All right, fine. So let's get on with it. So yeah, guys, I'm really sorry. Let's start the session again. Welcome everybody to the session. Sorry for the minor errors there. I want this to be the best experience for all of you, and with bad audio, it's not really good, is it? Okay. So yeah, I took a sell yesterday here on gold. So it was a great morning for me. It was up 7% off of this trade. Then I had a live trading session at 11:30 with my community, and then we started analyzing the markets for potential trading opportunities. The trading idea that we had yesterday was from 2 pairs. No, actually, we started off with 5 pairs. We whittled it down to 2 pairs, and I'll go over the second pair in a second, all right? And the trade idea was to take buys on gold once price created this retest of this level, waiting for price to close bullish to identify a potential continuation of this bullish behavior, and then I jumped in the buys here. Okay. So something like this, right? This was the trade idea. Then, as you can see, what happened, we was only targeting these highs, by the way, so it was here. And as you can see, what happened, the market pushed bullish, went into slight profits, and then unfortunately came back and stopped me out before continuing up to take profit. Okay, it is what it is. So this was my second trade from yesterday. So on this trade, I gave back around 2% of my profits for that day, and I was a bit cheesed off by it, but it is what it is. And then I called these sells out yesterday with them on the session. Now, this was a very fun trade that I never took. You know, it's just, that's the way it goes. Because after calling this trade out here, I I was already in gold buys, so I didn't jump into this one. But excuse me, like I said, it was a pretty decent trade. The idea here again was just to follow the overall direction of the market, which was bearish. You can see from the 4H time frame, the structure of this market was really strong to the downside. There was no evidence yesterday of pound showing any strength, so to be brutally honest with you, it only made sense that the market will continue down. This was the idea behind the trade. And then what we then did is waited for price to break this consolidation. So the whole time we was on the live trading session, we was waiting for price to create the retest or strong bearish candle into the key level here, and then execute the trade on the breakout of these structural lows, or looking for price to close below the level and then look for the continuation. And this was a pretty decent trade. This was your second trade idea here, with the stop loss above the key level and then going for whatever targets you're going for. So these were the two trades executed yesterday. So I never took this one, but I took the gold, took two golds, one sell, one buy. And yeah, I mean, it was a good day. As I said, finishing the week off, or this month up until now, at 27%, which is really good. But it's inflated, obviously, because I'm risking about 1.5% and 2% per trade. So let's just look at that as being 12 or 13%. All right. So great trade ideas here. Now, I just want to make a point about something, because, you know, as I said on the live sessions, we have pessimists and we have optimists. And these live sessions are really designed to help you get an idea of my thought process and how I perceive the markets. This is not about me being right or wrong. So when we get donuts, leaving donut comments under my videos, you know, I'm just going to block you. Seriously, because I just don't have time for it. It's not about me being right and you being wrong here. You know, successful people, there's an etiquette, right? And when you are successful, and this is not about money, this is just about period. When you're successful, there's an etiquette, and you appreciate other people's success, and you admire what they do, and you respect them, whether you know them or you don't know them, and you use them as healthy competition if you need be. But other than that, you don't shit on them. Do you understand? And that's the etiquette of being successful, because you know how much time and effort you put into what you're doing, and you just wouldn't do that. So when you're leaving dumb comments underneath my videos, not that I have anything to hide, and neither do I have to prove myself, but you're going to just get blocked from my channel. You probably can come on from another thingy, but you're going to get blocked, because I just don't need it. I don't need it, because if you're not paying my bills, if you're not sleeping in the same bed as me, if you're not cleaning my bathrooms, or you have my dinner on the table when I come home from work, then you really don't have that much importance to my life, especially when you're leaving negative comments under my stuff. All right? So this guy, whatever his name is, whether he's a guy or a girl or whatever, wanted to leave some idiot comment under my post, and I want to address this. You guys remember on the live stream 2 days ago where I mentioned that if Euro USD breaks out of this consolidation to the upside, right, we look for buying opportunities on the break of this structural high. Now, on the session, we mentioned that price is consolidating, moving sideways. Okay? So when price is moving sideways, what are we looking for in theory? We're looking for price to break above structural highs for retest or continuations, or break below structural lows for retest and continuations. Even if the market is in a downtrend here, this does not mean once price goes into a consolidation that the market is still in a downtrend. Okay? It means that the market is in a consolidation. So if I'm at the time watching the markets and I see that the current behavior of the markets for that day is pushing bullish, and we're having strong bullish candles into key levels, once you remove this data and now you scale down to your intraday time frames, what directional bias is the trend moving? If it's making higher highs and higher lows, it's moving more bullish. So I'm not then going to disregard the day's behavior based on the news and based on the fact that the dollar was weak, and say that I'm looking for sales now because the higher time frames is trending down. It makes zero sense. Now, if everybody followed that theory of if the daily's down or the weekly's down, look for sells, or if the daily or the weekly's up, look for buys, then don't you think we'll all be successful traders? Do you think we'll take trades in the wrong direction if we all just followed the higher time frames? Of course we would, but it's not as simple as that. So for that reason, when you're making your analysis, of course you have to look at the higher time frames to see what it's doing, and if it's trending down, then in theory you can just look for sells only at key levels. But if I'm an intraday trader, I'm going to trade in either or direction. I'm not trading off the higher time frames. I'm using it for biases, right? So on the session, I mentioned that day that the market is more bullish than it is bearish in terms of behavior. The consensus of the market was dollar weakness. The current behavior from that morning, from the London session, was bullish. So if the market is going to continue bullish, then there's a high chance that because we're in a consolidation, the markets might reverse and continue up. So what was we waiting for? We're not looking to take immediate breakouts because we're not a donut. What we need to see the market do is take out the structural high to invalidate the downtrend. That's exactly what I said. So if the market does that, then we can look for buys. But did it do that? No. So if I said to you, I'm looking for buys, it doesn't mean that I'm going to take buys until the market does exactly what I want it to do. All right? Donut. So the market never done that. Now, this brain scientist, whatever he thinks he is in this comment, decided to message me after the market broke the structural low and went lower and said, see, Rox, I told you the 4H was down. You don't follow your analysis. You say you use the 4H and the break and retest your bread and butter, but you didn't look for sales. Well done, George. Well done. You called out the right trade. Well done. But if the market went up, you wouldn't have left that comment. But because it went down, Rox is now the worst trader in the world because the market is sell bias and you managed to take a sell. Congratulations. Congratulations. Now, let me tell you something, George. Okay? This is what happens. If my bias is bullish and the market is not sustaining that bullish behavior and holding above the key level or breaking 1900 here, and I start to see price rejecting, creating bearish behavior, do you know what I'm doing next? I'm looking for sells. If the market starts to break the structural low, I'm looking for sells. Just like you. Just like you. Because it makes sense. But I'm then not going to turn around and make a video for YouTube or Instagram and see like, oh, look, guys, I was right. Because the trend is down and it broke the structure and now it's time to take sells. What's wrong with you, man? What's wrong with you? Like, I'm happy if you took this trade and you done well and you didn't listen to Rox and you passed your challenges and you made some money for that day. Well done, man. I'm so happy for you, seriously. But to leave stupid comments like that under my videos is dumb. Because I would be on the same bias as you the minute price rejects this level. I'm looking for sells immediately, mate. 100%. I'm taking the immediate breakout using the intraday time frames after this behavior. Hence the reason why this level was here. Because I'm not looking for this to be broken. I'm looking for this here to be broken because of the behavior here. And then I'm taking the trade, putting my stop loss above the key, the structural high. And then I'm going for my 1 to 3 risk to reward ratio. Just like you. Just like you. If I didn't already make 6% on that day, then I would have taken this trade as well with you. Don't be stupid, man. And why waste your time watching my streams if you're going to come here and do that rubbish? And to be brutally honest with you, I don't know how you call this a higher time frame retest if the market just breaks the structure unless you're using intraday time frames, because now is the retest, right? Anyway, it's not about me being right or wrong here, or you either. Just don't leave stupid comments under my thing, man. Please. Because that day I called out Aussie dollar JPY, Aussie dollar USD buys, called out USD CAD sells, and they all went in the direction I called it. But you found that one trade. That one trade that didn't go in the direction. Don't be an absolute George. Don't be an absolute George. Anyway, So market conditions for the last 2 days have been pretty sour. It's been pretty sour. Okay. We've just seen the markets really, really flat. And to be honest with you, I've also identified that as well. It's been tough. Now, in terms of moving forward because yesterday was news, right? For the dollar, I believe, in the evening. For the dollar, but clearly it didn't have an effect. So now the way I see the markets is more rangy than anything else, which is tough market conditions to trade. Now, going back to what I've just mentioned in terms of the biases that we had, the just illustration that I just shared with you on Euro USD, we're going to be doing that again today. And this is how I personally would trade this. Let's say now you have a consolidation and you don't have a bias in terms of clear trends. What you can be doing now is you can be isolating your structural highs and your structural lows. Now, what this will create is your intraday consolidations, okay? And what you do at this stage with intraday consolidations is you identify the immediate behavior. So the current behavior of the market is bullish, okay? The current market is bullish. Intraday is bullish, okay? Let me show you this even further. 5-minute time frame. Intraday is bullish. Okay, let's understand this. Intraday is bullish. So if current behavior is bullish and intraday is bullish, what is your candidate of choice here? Are you looking for sells or are you looking for buys? Well, more often than not, you're going to be looking for buys. Okay? But you need price to create structure in order to validate those buys. So we're in the 5-minute time frame here. How can you do that? Well, firstly, you identify your ranges. So in a consolidation, especially from an intraday, you identify the major low and the major high here. Now you identify the current trend, which is higher high and higher low. Then you isolate the area in the market where price is holding above. And then you look for your patterns, which are your retests or whatever else. Now, if you don't want to trade within the ranges here, what you're then looking for the market to do is clear the consolidation. That will continue to validate the uptrend, and then you look for the retest and then the continuation thereafter. Okay? So this is a very important lesson that you understand. It doesn't matter if this higher time frame is trending down. Okay? Back to the point. It doesn't matter if the higher time frame is trending down. If the markets are consolidating, but you want to trade these market conditions for your intraday trading basis, on an intraday trading basis, then this is what you're going to be doing. Okay? I'm not going to go into any more details about this, but if you watch this back again and take some notes, I can tell you that this would be a great trading opportunity. Now, don't be the type of person that looks for a sell from this point, because you're going against current behavior, you're going against intraday trends, and at the same time, you're stuck in a major consolidation where you're going to find lots of traffic if the behavior doesn't play out as anticipated or how it's illustrating, okay, or being illustrated. So the idea would be, if you're looking for sells, you only in theory look for sells on the break of the low, okay? Or a strong push to the downside, then the break of the low. Does this make sense? Okay? Very important you understand. So that's kind of the approach that I will take with GU this morning. Now, this doesn't mean you're looking for buys just yet. This is just an idea. We looked at one pair. Now you go on to find the confluences and you find the currency strengths. So now we move over to Aussie dollar JPY. What are we understanding from Aussie dollar JPY that will help us with GU? Absolutely nothing. Okay? So for now, we'll just focus on the structure of this market, which is currently bearish. Now, with this bearish structure, we have what behavior? Bullish behavior. With the bullish behavior, how do you identify trading opportunities? You isolate a level where price is failing to break above. Here you have it. Now, what do we have again? You have your intraday trends. Once you have your intraday trends, you mark the structural low and high. Previous behavior was bullish on the 4H. Current behavior on the 4H is bullish, right? How do you trade this? Scale down to your intraday timeframes. You identify the behavior, which is trending up. You identify price looking to break the key levels, create the retests. And let me show you what the retest looks like. Here's your retest. Okay. Break, retest. So you look for your retest. Then what do you look for? You look for the behavior to be in line with the overall consensus of the higher time frames, which was bullish, trend, which is bullish, breakout, retest, signal, which is bullish, enter the trade, stop loss below, and then you go for your targets. Okay? This is gold dust. I don't know what order flow is, my friends. I trade price action only. Yeah, so anything to do with order flow, this flow, that flow, I don't know nothing about. I'm just following price action. So this is how you will trade it. So what does that mean for the rest of the day? That means that if the market sustains this bullish behavior, which is the break close above 81.75, and the market continues to push bullish, then there's a very high chance that we'll continue bullish for the rest of the day, even though the structure is bearish. Why? Because you have to understand this. Every phase in the market will change. So you have a sideways moving market, you have a push phase, and you have exhaustions. Okay? So think about this. If the trend of the market is down, and this current status of the market is in a push phase, price is failing to make new lows, and we know that the second stage after a push phase is a pullback. We also know that in a downtrend, you look for break and retest patterns to take trades. So you wait for price to pull back here. That means that the confluences line up that even though the trend is down, you can still wait for the exhaustion or the pullback into a retest level before then taking a continuation. Do you understand this? So we're not trading against the trend, we're trading with the trend, but we're just trading the different phases of the market. Does this make sense? I'm waiting for an answer, guys. Does this make sense? Okay, fine. So that kind of would be my thought process moving into the New York session with Aussie dollar JPY. Now, I just want to make this very clear, okay? The markets will either push higher, will reject and push lower, or will just sit there and move sideways. If you make a plan and the plan does not play out as planned, guess what? You don't lose money, you don't take a trade, and you just wait for an opportunity on a different pair, or you walk away for the day. That's it. So yesterday, on our live trading session, I had 5 pairs that I was looking at. I made a plan for all 5 pairs in the first half an hour. Sorry, everyone. In the first half an hour, okay? After the first half an hour, it took another hour to watch how the markets were playing out. So an hour and a half of patience after planning 5 trades. By New York Open, I had removed 3 pairs from my watch list because the markets didn't play out as planned. Now, could I have traded those other 3 pairs in the other directions? Well, of course I could. With my experience and knowledge, I could have traded them from an intraday basis because it's just how the market moves. But I didn't, because it didn't play out as planned from the higher time frame perspective, right? So then I kept the 2 pairs, which was gold and pound JPY. And I didn't shift from them because the market conditions stayed how they should stay in order for me to take a trade. So I took gold. Gold stopped me out before going up, but that happens, right? But GJ played out perfectly to the T as planned. So what's the point I'm making? Once you make your plan for your trades, if it plays out, keep them there, wait for the trades. If they don't, walk away. Because you would avoid FOMOing, avoid taking trades in the wrong direction, you'd avoid revenge trading, etc., etc. And plus, also, you will be so much more comfortable in your trades as well. So much more comfortable in your trades. There's nothing worse than taking a trade that you're not comfortable with. Okay? So let's move on. Now, what are we understanding from the markets right now to help us with pound JPY? Well, let's do this. We can see here on Aussie dollar JPY that there is clearly a weakness in the yen. On pound JPY, we can also clearly see that there's a weakness in the yen. These two pairs give us great confidence that the markets are more likely to push bullish than they are bearish at this stage. Also, we can see that the structure of this market has been in the strong push phase, which means that we're going to get the exhaustion back to at least a key level. It may never get back here, but that's the idea. We can also identify from GU that there is a strong pound, meaning that with a weak yen, a strong pound, confluence from Aussie dollar JPY, now looking at pound JPY, what bias are we on GJ today for the New York session? What bias are we? Bullish. Okay. That would be the idea, right? That we'll be looking for potential buys today. Because the confluence of, at the moment, pound being strong, intraday perspective, guys, intraday, yen being weak, and current structure of the market in a strong push phase, exhaustion phase, current behavior bullish, and yet weak yen, we could potentially look for buys. Now, does that mean you can't look for sells? Well, of course you can. But I want to stick with the market's consensus. And the market's consensus at the moment is highlighting to me that it's more bullish than it's bearish, just from an intraday perspective. I only need to know the behavior of the market when I'm trading it. I don't care what it does when I go to sleep, when I eat my dinner, and everything else. Let's not say anything rude. Do you understand the point? Currently bullish. With that in mind, I can use that consensus to go down to my lower time frames, identify the intraday trends, and then look for tradable opportunities. It doesn't matter if I'm here on the 5 minute, I can isolate a structural high and a structural low. Then I can wait for price to start breaking above structure. Once I get price breaking above structure and closing, strong enough. What can I do here? Then I can scale down to my 1 minute time frame, and I can identify the trends, look for potentially immediate breakouts of structured levels, look for retests and everything else. Let me push this one more candle to get some more data here. Oh, that's the data ended. Oh, shucks. Okay. So this is the breakout level on the 50-minute time frame. This is the retest level here in the 50-minute time frame. Fine. Okay. I thought that pushed up more. I didn't go back further enough. But there you go. Never mind. You get the point, okay? So now how would you trade this for the New York session? Well, this is how I would plan pound JPY. So using the hourly, because I want to get more wicks. I can't get enough wicks here. I need more wicks here, okay? So let's see. Isolate your structural high. This is where price was failing to break. Now, here is our retest level. But is this good enough to trade? Well, we're creating multiple wick rejections here. Let's not ignore it, okay? We need to isolate this level because we're not breaking above it. So now we have our higher low where price can trade above to keep this uptrend. And we also have this high where price is failing to break above. Now, validate that with your intraday time frames and understand this. That if price starts to break this level, we take out the previous high. We anticipate that price comes back to a previous retest level based on a pullback. Now you identify the current behavior of the candle, which is an indecision. But if the market continues to push bullish above the previous high here, then we make a new higher high in theory. This candle continues higher. So now we go to, let's say, the 15-minute time frame or 5-minute time frame, and you make a plan wherever time frame you want. Structure, okay? You make your plan. Now, some people may not like this way of trading. That's fine. You just click off the screen and go to somebody else's stream, right? But I'm just sharing you my thoughts. So the idea would be for price trade above the structural high or low to see the continued bullish behavior break above. Now, I personally wouldn't take the immediate breakout at this stage. Only around the New York session would I do that because that's where the volume is. Then you look for your retest, and then you look for your continuation. And this will be you anticipating that the market will continue higher back to the previous retest level. Now, this range now from where the market is to where the market could go is 55 pips. You do not need this much pips, but you have a great range to take this trade. You do not have any traffic here to the left that's going to cause you any problems, because you're isolating the previous level on the 4H time frame where price can come back to before it finds a retest and then continues bearish. So this is how I'll trade it. That just falls in line with identifying that the pound, look, the pound's already breaking out here, man. Pound is showing strength, yen is showing weakness, and we put that together. What else can you anticipate? How can you think this is going down? Do you understand? You can't think this is going down. So, and if it does, then as I said in the beginning, you just don't take the trade, right? Simple as. Simple as. Fine. So that's the bias. Now, what are we identifying here? Well, based on pound USD, we're not identifying any what? Any dollar strength. Here on USD Swiss franc, what are we identifying? The same consensus. There's no dollar strength. Previous behavior of this market condition has been bearish. Okay, we create a lower high, so you identify now the lower high. You also identify here the structural high, lower high. So now you start to form what? A downtrend. Once you form the downtrend, what do you need to do? You need to isolate the structural low, because if the market breaks the structural low, what comes next? A new lower low. How do you trade this? Well, exactly like this. You wait for the market to break the structural low. This is the 15-minute, by the way. But you wait for the market to break the structural low, and then wait for the market to pull back to create the retest, which you'll find on your intraday timeframes. Okay? You see how we're using 15-minute and 1 minute now? It doesn't matter what time frame you're on. You look for the market to create the retest, and then you take the trade based on a signal, maybe on the break or a strong close. Stop loss above the key level here. Let's go for, no, 3 pips is too much. 2 pips is too small. 2.5 pips, but you want it above the level, so it'll be a 3 pip. And then you go for your targets. You see this? You see this? Okay, so that's how you'll focus on it. Now, how do we take this trade, or how will you be taking this trade? You identify previous behavior, which was a failure to close bullish. You identify current behavior, which is the market switching bearish. You add the confluences, which is the structural low. If it breaks, you can look for the trade. Overall trend is down. Dollar is showing no signs of strength based on GU confluence, and then you just scale down very simply. Look for the previous behavior. Look for the previous current intraday trend, which is down. Look for the pattern, which is the retest, and then you look for the continuation. And that's exactly how you trade your multiple time frames. Okay. Now, what can you be looking for the New York session? Well, the current 4H candle is, or has just opened, I think, an hour ago now. And I mean, G's on P's. This candle has pushed a lot already. But this is USD Swiss franc. So this means that the market can continue pushing bearish as much as this. So the idea now for the New York session would be to see this continue pushing down. Now, how can you find management levels for a trade if you plan to take it? Well, you want to isolate a level where price can find the most resistance, which is going to be the structural low. And you can have 2 plans now. You can say to yourself, if you're not already in these trades, then you stay out. You wait for the major level where the resistance can form, and then you wait for the breakout and retest here for the continuation down, if you're not already in the trade. And that's how I would approach USD Swiss franc. Let's take a look at Aussie dollar USD. We know that the market conditions at the moment is showing signs of dollar weakness. Previous behavior this morning has shown that prices failed to make new lows in this downtrend. We have a current level in the market where price has now broken above. You bring the confluence together, you can ask yourself, what are we looking for? Current structure of this market was bearish. What do you anticipate? You anticipate the exhaustion. And once you get the exhaustion, you may anticipate then the continuation at some point. This is where we can expect the market to come back to if it's going to continue bullish for the rest of the day. Okay, so how would you trade this? Well, if you're not already in a trade, you're then just scaling down. What time frame do you want now? 15-minute again, or 30-minute? Let's go 30-minute. So now, what you is the same thing all over again. Okay, so you have a consolidation. You wait for price to create the breaks of the low or the highs, and then you isolate the behavior into the, or you identify the behavior into the level. You have an intraday high or low here. So when you go down to the 5-minute time frame, you'll see the trend, which is pushing bullish. And then what are you looking for? You're looking for levels in the market where price creates support to look for patterns, or you're waiting for the market to break close above a level and look for that continuation. Whatever your signals are, I mean, it's really up to you how you take these trades, but you have a bullish signal here, stop loss below, and then you go for another trading idea. Now, this is not just about patterns. This is just about how the market moves and how do we gather this information. Well, let's go through this one more time. We're identifying here on pound USD that the dollar is weak. Pound is showing signs of bullish behavior. Here we identify that the yen is weak, so we know that the market is pushing bullish. This is also signaling to us that the Aussie dollar is strong. When you go to Aussie dollar USD, you bring that confluences together and you identify that the dollar is weak, Aussie dollar is strong, the behavior and consensus of the market is bullish. Wait for your patterns in line with the confluence you find from Aussie dollar JPY. One of these will lag, one of these will lead. So if you know how to do what I've just done, then you find two pairs that correlate, that are of the same currency, and then you wait for one to lead and you jump in the next one that will follow. It happens all of the time. Okay, so let's say now pound USD is continuing to move bullish. You're identifying here currently that the pound is strong. In order to validate taking pound yen buys, you know that in theory this should be moving bullish. So you wouldn't really be taking a trade immediately until price confirms this around the New York session. Okay, and that will be the break close above, retest and continuation. But only if pound USD sustains this bullish behavior above the consolidation, which is this level here, and then you look for this to lead and then pound JPY to follow. All right, maybe that's too much for you guys to understand, but that's kind of how it will go. So the idea behind Aussie dollar USD is to see how this will continue bullish for the rest of the day, and if it doesn't, then it is what it is. You know, just recap again for the New York session and see what happens. All right, so USD JPY, we're identifying that the yen is weak, and we're also identifying that the dollar is showing no signs of strength currently. With this one, it's a little bit more difficult because more often than not, you're going to find that the market will consolidate and move sideways. But with this information, we can identify that the yen is a lot weaker. All right, so the way I would approach the markets is if this continues bearish in line with the downtrend, fantastic, is what it is. Those selling this or swinging this, you know, you're in a good trade. But for me to have 100% confidence that I want to buy this, I'm going to need to see this behavior sustain based on the consensus of the overall market. So I will just simply isolate the structural highs here. That's it. I would then anticipate the markets to come back to the retest level. And then I would say to myself, as long as price does not break close below these levels, no, this is not the higher low. The higher low, this is the consolidation, and this is the higher low. This is the major structural low, and this is the breakout and break back in. Okay, fine. So the level that I'm looking for here, I'm confused about this level because I'm on the 30-minute, is the major low. That's the major low. There's a major structural high, and this is a very important level. Okay, yes. So as long as price sustains the sentiment above this structural high, and the market continues pushing bullish on the breakout of this level here, with the overall market consensus being what it is, I will happily take buys all day long. Okay? All day long. Because the intraday trend is bullish, current behavior is bullish, and the market conditions are showing dollar weakness, showing signs of yen weakness, and currently more signs of dollar strength. Okay? This type of strategy is okay when there's a lot of volume in the sessions, otherwise it's a break and fail result. Beware. Do you even know what you just said, my friend? How can you say that? Last month I finished 57% in profit, and then this month I'm currently up 27%. Think about what you just said. If I'm trading based on the behavior of the market today and the structure of the market today, then how will this be a failure of strategy? This is not even a strategy. This is understanding price action. So as long as my plans and analysis is in line with the price action, how can it be wrong, my friend? Think about what you're saying. I don't know what wick off is, guys. You guys always leaving that comment underneath my thing. What is wick off? What is wick off? I'm sure wick off's to do with stocks. Anyway, so that would be the way I would approach the market today, right? Now, can that change for the New York session? Well, of course it can, because I've isolated the consolidation. If the behavior of the market starts to break below here, then that means my intraday trend is being violated. Structures are failing to break above the highs, and we're taking out the major lows, meaning that what will set up a potential new downtrend based on price action. But I much prefer to take the trade in line with the consensus of the overall market, which is currently illustrate or identifying to us that it's bullish. Okay, so see what happens. If it plans out, I would look to take the trade, and if it doesn't, then guess what? I'll walk away. Simple. I don't have to trade every day. Now, taking a look at Euro JPY, you guys now, from what I've mentioned on this session, should be able to identify immediately where the market's going. Okay, so without even looking at it, I should have asked you, where do we think Euro Yen's going today, based on what the market is doing? Where do we think it's going? In theory. I didn't say dollar showing strength. I said dollar showing weakness at the moment. Buy it. Okay. Where do we think, based on what we've spoken about so far, where do we think the USD CAD is going? Where do we think USD CAD is going? USD CAD now, USD CAD. USD CAD. USD CAD in theory should be going bearish, right? Where do we think Euro USD is going? Where do we think Euro USD is going? Euro USD. Euro USD up. Okay? And finally, where do we think gold is going? Well done, everyone, man. It's beautiful. At least some of you understand what I'm talking about. Where do we think gold's going? Last one. In theory, gold should be going up. Okay? Now, you didn't even need to look at that. And imagine, just from taking a look at a couple of pairs, you already know how to identify what the market conditions will be. So now when you go over to pound USD and you study those 4 pairs or whatever pairs you got, you will say, and this is how beautiful this is when you understand price action, and then you incorporate the behavior with your patterns and your signals. Okay? Once you understand, and you can do this in the mornings or before you trade, okay? Okay? This is what you do. You say, based on the market sentiment, I have identified yen weakness, dollar not showing signs of strength, pound showing signs of strength. Meaning, if I'm trading Euro USD today, I want to see that the market conditions align with my pre-analysis. So let's say you're trading Euro USD. It must align with your pre-analysis. Euro USD must go up. It's looking good. Now, what's the next stage? Make a plan. Isolate your levels. Today, based on the market sentiment, as long as price trades above 1830 and we start to break above 1850, I can look for buys on Euro USD. Then, how do you make a plan? You go down. You identify what is happening on an intraday basis. And from an intraday basis, you can identify that the market has been ranging and moving sideways. So just adjust your levels. Now, Can you take a trade now? Based on the 30-minute, you cannot take a trade because the markets are moving sideways. What's the plan? You make a plan. The plan is to wait for the break, the retest, and the continuation. Find a destination. If the market starts to break these highs, where can we go? Well, we're more than likely going to find traffic here. Then reevaluate and say, well, if the market breaks, do I have enough range to take this trade? This is called planning your trade, all right? Do I have enough range? It's 13 pips. It's questionable. So let's say you don't trade this because of the range. You just wait for a clearer range and for the break of the highs. Let's get even deeper into this. Let's say now, at this stage, you've identified that the current behavior of the market has been bullish. In a push phase, you have a pullback that creates what? An exhaustion high or low. And then you identify that the current status of the 4H candle is what? Bullish. Meaning based on current behavior, there's a high chance price will continue to wear back to a structural high. How do you trade this from an intraday perspective? You go down to your 30-minute time frame and you identify and isolate a structural high and a structural low. Okay? Then you scale down to an intraday time frame and you look for the market to create the breaks above key levels and retests. Once you identify the retests here, you can use even more intraday time frames which validate the overall structure and behavior of the market. When the market is trending up, you have the structural break and the retest, and then you have the bullish behavior, and then you enter after you get the signal, and then you anticipate the market to continue bullish. So you see how once you've identified the consensus of the market, which we've done from the morning, which is the USD weakness, you then can identify the current structure of the market and behavior, identify a plan where the market can go, which is back to a structural high, and then use your intraday levels, marking your structural highs and lows, to then isolate levels to find the trends. So you look for the close above. And then once you do that, you can just use the intraday trends, which is bullish, high highs and higher lows, look for the retest, and then take your trades in line with the market consensus. Market consensus, not Rox's strategy, not anything that I'm making up or trying to sell on the black market here. This is just how the market moves. Do you understand? So all of you wizards out there who are trying to tell me that price is coming back to this level and that level and this and that and this and that, why do I care? Why do I care? Why should you care? The point is, you're trying to make money, right? That's all you're trying to do, is make money. That's all we're trying to do, all of us, make money. So why do we care whether this trend is down and whether price is coming back to this level for a retest or going to continue here or here or here? All I need to do is just get into the markets, understand the consensus, find levels in the market where price is not breaking below or above, and then take my trade. Do you understand? And somebody mentioned about Wyckoff here again and accumulation distribution. Why do I care about accumulation distribution? If we found the answers to where all this accumulation distribution is going to be in these supply and demand levels, which work, so I'm not saying they're bad, but if we all knew where they was, again, wouldn't we all be successfully trading? So why am I going to spend the rest of my time, my career trading, after the last 8 years of trading, trying to figure out where these secret levels are? I don't care. You know, I'm just trying to make my money, get in the markets and out. Because the markets have no remorse. And I don't want to stay in the markets and get battered. I just want to get in the markets, take my trade for the day and get out. So I don't care if this is a distribution or this is an accumulation or this is the supply level, demand level. I don't care. Look, I can trade the 15-minute if I choose to. I can trade the 5-minute. I can trade the 1-minute if I choose to. I can trade the 15 seconds if I wanted to. Because all I'm trying to do is identify the sentiment of the markets, talking about all the pairs, currency strength, structures where price may find resistance. Once broken, identify where price can go to. Find the patterns that I know work with the signals that I know give me the highest probability of winning. Execute the trade. It will either win or lose. Like I said, I'm trading at 60% win ratio for the last 2 months. And some of you might be thinking that I trade at 80-90% win ratio. But I don't. As long as I'm trading above a 30% win ratio, I will make money because my risk reward ratio is good. I don't revenge trade. I don't chase the markets. I just take my trades, get in and get out, and done. Do you understand? No one. I don't personally care. I'm not saying that just supply and demand, Wyckoff, whatever theories are out there don't work, because they do. Do you understand? They do. But I'm sharing this with those who want to listen to me and understand my thought process in the markets. Do you understand? So this may not be for everybody. If it's not for you, click the dislike button and leave. And at least you share the love. Hey, and by the way, everybody, please, we're on 290 likes with 800 members, man. And I'm sharing all of this wisdom with you. Please, just hit that like button for me, man. Damn. Come on, man. The reason why the likes are good is because you continue to share the love and everybody gets to see it, okay? We called the markets bullish on pound USD. It's beautiful. It's just too beautiful. Okay, so in a scenario like this, okay, if the markets do not play out as anticipated, then do you know what we do here? We just put a red flag. Put a red flag and you walk away. Done. USD's off the list for the New York session because it doesn't make sense why it's going bearish. Okay? We could make sense of it and start to identify that the markets are now starting to show signs of yen strength, but it's long. We just want to stick to the pairs that make sense. We know pound is strong, so we'll focus on that. We know that the dollar is weak. That's what we're gauging now. The dollar is more weak than anything. Let's focus on that. We can look for the buys. Do you understand? Etc. etc. So, yeah. Anyway, so that's kind of the idea. I've given you. I'll let you lot do the rest in terms of the other pairs here. But I think that was a really, really good session. I'll answer some questions now. Please, guys, hit that like button for me, or dislike. Either or. I mean, it helps either way. Hit the like or the dislike. It doesn't matter. Just hit it for me, please. At least get me to 500. At least to 500, please. Okay. So let's take some question gold. If gold breaks out of 1808, then it's a buy. I think gold can even be a buy from here, you know, after we get enough evidence of price breaking above these highs. What level did you say? 1808. Oh, well done. Yeah. Good call there. Very good call. Who said that? Good call. I agree with you. If price starts to break out of these highs based on the current behavior, we can continue bullish. Thank you everybody for the likes. Thank you for the compliments and the nice messages here. I just won't be able to read them out. I'll just take the questions. So Saint, I trade both London and the New York session, but at the moment I've been trading the New York session because I just don't want to have to wake up and think about trading. And as I said, for the last 2 months I've been doing extremely well, and I think that's because I've increased my risk a little bit and I'm not having to trade as much. But personally, I'm not the type of guy to hold my trade till the New York session. Look, the basic theory behind my approach to the markets is to get in and out of one candle. Let me just, this is gold dust that I'm telling you here right now, okay? But I'm looking to get in and out of the markets on one candle's move, okay? So let's say I'm trading the 4 hour. I want to be in and out of one candle. If I'm trading the hourly, I want to be in and out on one candle from an intraday perspective. If I'm trading the 15 minute, I want to be in and out from on one candle using, let's say, the 1 minute. There's no way. I'm not the type of trader, and I'll take 3R, 4R, 10R. I can show you some of my members' trades, and you'll see some crazy trades just from 2 candles, 10R trades. It's not to brag here or show off, but I'm just, just want to let you know that I'm not the type of trader to do none of this, man. Psh, I'm not interested in this. This is the hourly time frame. In my mind, why would I want to trade this big old fat trend when I can get in the markets and ride this one candle and take 4R or 5R from the markets? Why'd I have to be in this whole trend when I can just trade this one candle? One candle. All I need to do is just scale down to a good enough time frame to find the trend and identify it, isolate the levels, isolate the signals, understand how structure works, which means price should not break below this level, jump in the market, and look here, Bob's your uncle, mate. Do you understand? Why? Current behavior of the market is bullish. Isolate structural high, structural low, intraday trend up, breakout close above, bullish signal, buy the market. I'm out of the market. I wouldn't hold it for 4.5 hours. I'll have to find my levels, obviously, but I'm in and out of this market before even the hourly candle's closed, whilst most traders are now sitting in this trade like this. So I've got 4.5 hours off of that within seconds, and now you're waiting for your 3R. Okay, 1 hour, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 8, 9, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44. Let's just say 44 hours you've just sat in that trade just to get your 3R, and I'm in and out of the markets in less than an hour over here. And that's why I focus on price action, structure, and behavior. Once you know how to use your higher time frames or your lower time frames, your life will change. Guys, please hit that like button for me, or dislike, either one. Does that make sense? This is how I trade, basically. What's the time? I have to jump off in a minute. And let me just tell you something. No time frames are as or least important than the other. If you're trading price action based on current behavior and market consensus for today, if you find the structures on the intraday and the patterns that are part of your plan, you can just take the trades. It's that simple. And you know why this stands the test of times? Because it's not a strategy. It's more understanding how the markets move and being able to identify strengths and weaknesses, etc., etc. So every time the markets change, whether they be ranging, trending, they're erratic, they're not, I'm flowing with the markets. Every day I'm flowing. Do you understand? Every day I'm flowing. So it's not like my 61.8 level or my Parami back pattern or whatever becomes invalid anymore, because I don't rely on nothing else other than what the candles are doing. Do you understand? So sometimes my members in the community ask me, oh, Rox, what happens if the market starts to slow down? What can we do? I said, then we just take the knowledge down to the lower time frames and just trade them. What if the markets, this is a question I get most of the time, what if the markets continue to range like this and they don't move? I said, it's no problem, because I'm not trading the trend of this market, and I don't care what the market is doing here, here, or here. I'm looking to trade one single candle. That's it. So I'll just use my 1 minute time frame, and I'll go down here and I'll work with it, and I'll identify what the market is doing here, and I'll make a plan based on it. So now all I need to see is 1 hourly candle move up or 1 hourly candle move down to create structure from a 1 minute perspective to then be able to take a trade. So what would the idea be? You can buy the bottoms, sell the tops, wait for the breaks and the retest and the continuations, and just that. So the markets can range all they want on the higher time frames. I don't really care. Is GU buy safe? I'm not going to give you signals to buy. It's up to you. I have told you my thoughts on it. Okay, so 2 more minutes left. Thank you everybody for the likes and for joining the session. Okay, fine. So that's it. So that's my ideas on the markets today, everybody. I hope you find success this Friday. I won't be trading. I'm going to be taking it easy now. But that's my thoughts. As I said, if the markets continue to play out as anticipated, then, you know, look to take those trades. And if they don't, then just step out of the markets and wait for a better opportunity. Not every day is a trading day. Thank you for joining the sessions, everybody. For those that don't like me or like the session, please hit that dislike button. And for those that support in the channel, I really want to just say thank you. And please, one last time, hit that like button for me. Other than that, have a great Friday. Have a great weekend. And I will catch you back here. I think you'll catch me back here. I don't know when next. Sorry. Bye, everyone.